Well, it's time to define a marketing term. Commodity broker, analyst, and author of Mastering the Grain Markets, Elaine Kub joins us. She believes the key to profitable grain trading is building knowledge about the fundamental practices of the industry. Today, she'll help us explore two types of market analysis, fundamental and technical. Let's define both, please, Elaine. Start with technical trade.
Technical trading is chart-based trading. So you'll hear people refer to themselves as a chartist. And in this instance, they just look at a chart of prices, like a stock chart or specifically a commodity chart in this instance. And if they see a pattern on the chart, they can trade with that pattern. For instance, the most basic pattern would be a trend. They might identify a higher trend in prices. Or they might see a trend change. They might see something happen. The prices may move over a moving average or under a moving average or a strength index or these measurements that they take as technical traders. And when a trend change happens, that's a trigger for them to sell. So they base all of their marketing decisions or their trading decisions based on what the charts have done, the patterns that are being formed on the chart.
And fundamental trading?
Fundamental trading is less concerned with what the chart looks like in the past and more concerned with how prices reflect supply and demand. So, a fundamental picture of the economics of a market. So, this can be a lot like value based trading in the stock market, where you would calculate a value of what a stock should be priced at. You could perhaps come up with some theoretical value that you feel a commodity should be priced at, and is it higher or lower than that based on what you know about supply and demand or what may change about supply and demand that you anticipate in the future.
Are there fundamentalist and chartist only in the trade?
There are some who are purely one way or the other, but I think particularly, with farmers, when we're talking about marketing grain, you see people use a lot of both ideas. You may have a bias, a bullish or a bearish bias based on the fundamental analysis of the grain markets, but then choose when to sell or when to buy based on a technical signal. And furthermore, I think it's important, even if you don't necessarily believe in these chart patterns or magic numbers, to still pay attention to what the technical traders are doing, because if they do enough of it all at once, they do move the markets. So I sometimes do pay attention to the momentum that is being done by technical traders.
Are the chart patterns based wholly on mathematics, or are there just patterns that show up that people see in the charts?
Yeah, there's definitely both, Todd. Sometimes there is some mathematics being done just to calculate, an average or this. But other times, you're right, it's just basically a picture on the chart. For instance, the head and shoulders pattern is something that you see sometimes, and it has some validity because you're showing the chart come up to a level and then surge up to a slightly higher level and then fall back down to that previous level, and that sort of shows the market topping out. It's a pattern of behavior, when buyers will come in and then the buying interest sort of runs out. So some of these patterns, really do reflect something behavioral in the markets, but sometimes they're kind of just pictures on a chart.
Are there software packages or computer-driven packages that allow the marketplace to be traded based on those particular technical trades?
Oh, absolutely. Basically, every charting software package you can get will automatically set up some of these most common chart-based patterns for you. And in fact, you can set up your entire trading program to just trade based on these technical signals, without you even being involved. You can be asleep in your bed and you could be having your trading program trading based on a relative strength index or moving averages all the time.
It sounds dangerous to me.
It sounds dangerous to me too, but this certainly is happening, and I think it happens to a greater and greater degree these days. The high-frequency traders, the algorithmic traders, a lot of the volume in the markets is coming in from that kind of trade.
Thanks, Elaine. Elaine Kub, commodity broker, analyst, and author of Mastering the Grain Markets. I'm University of Illinois Extension's Todd Gleason.